I'll be joined here on stage for this by, for one, Henriette Lininger, who's Director Issuers at the Wiener Börse, where she's responsible for listed companies and also for the traction of new ones, as well as Florian Wimmer and Jürgen Prumetz. Florian Wimmer is the founder and the acting CEO of the tax calculation software Blockpit, which he founded in 2017. And Jürgen Prumetz is the head of corporate capital markets at the Erste Bank. Please welcome them up here on the stage with me right now with a round of applause. Freie Platzwahl, so you can just take and choose a seat. Perfect. Thank you so much for being here. We will now, in the next half an hour or so, be tackling the question of a unified European capital market and looking at it from the perspective of the startup right up to the stock exchange, which also explains the different guests that we have here today. I'd like to start right at the core, and the first question to you, Henriette Lininger. Why does Europe need a unified capital market at all? Like, what's at stake if we don't have one?
Yeah, thank you. Thank you for being here. It was quite on short notice. I'm glad to be here on this panel today. First of all, I think any harmonization has, in fact, be resolved on an EU level, and starting with corporate law, tax law, insolvency law. And the decisive leverage lies with the member states. So, and this is also the point where it comes to create capital pools, bigger capital pools. And so this is crucial for our prosperity, country's prosperity, which comes from strong economy, and strong economy comes from great companies needing finance.
Okay, I'd like to get Florian and Jürgen in on that as well. Do you agree? Like, is that the reason why we need a unified capital market in Europe, or is it even necessary? What's your perspective?
It is necessary.
Yeah.
I think if you want to survive in Europe as a dominant or relevant player within the world, it's just about getting liquidity in every stage of a company's life cycle. And I think we cannot do that right now as we are set up in Europe.
What are we lacking?
I think from Series B stage onwards, if you want to name it like in the VC terms, we're just lacking the capital pools, the concentrated capital pools that can do such large investments and also follow on investments if a company actually is successful and growing. Because right now what we're seeing is that the real big money comes in at those very interesting stages where a company becomes a relevant player in the economy, is not from within Europe, but from outside of Europe. Mm-hmm.
Yeah, Jürgen,
I mean, from my side, of course it is needed that we have to do something in Europe with our capital markets. Now, unified capital markets is a very broad term. It is a term of a political concept at the end. And the question is how it is interpreted and implemented. My personal experience is that the key challenge we face in Europe is a mindset. And that's what we really need to have to change the mindset of people to do an investment, to accept and acknowledge that some people are rewarded for the risk-taking they are doing, and to have a simplified ways for companies to go to the market, to go out to the investors and to ask investors doing some investments. So I think a unified capital market alone will not change the reality. The only thing what really changes the reality is a proper investment base and willingness to do investments and support corporates.
But is such a proper investment base possible without a unified capital market? Like, I want to get down to the point whether you believe it's a necessity to have one or not.
I mean, when we look, for example, to Poland, Poland is a market which has, in comparison to many other states in the western part of the European Union, a shorter history, but they are playing the capital markets very well. They do have a strong local investor base, and this strong local investor base is willing to support corporates in different stages and different approaches. So I think there is a basis there. The only topic is we need to simplify this type of investments. A lot has been already done. But we also need to be careful because just regulatory framework will not change the picture. We have already a lot of regulation. And I think that's the biggest challenge I see with all this regulatory mechanism. When we just add additional regulation from the idea that some states will accept it, at the end we see it in many countries, it's a matter of interpretation. And some things need to fit together. Yeah? Having a unified capital markets where you allow shorter settlement circles, for example. This will not help if you have a corporate law in certain countries where you cannot ask for a registration within a proper short period of time.
Well, adding new regulations is something that we're very good at in Europe, but I don't think it's always been in our best interest. Henriette, I saw you nodding in agreement on some of those points, yeah.
Exactly. But I think I would like to add that politics is key. Political will is crucial because this determines the regulations on the one side, but also the mindset. And we can see that actually in Poland, where they implemented great incentive plans for retail investors. But there has to be a political will first.
I think we also have the problem of the fragmentation. So it might be working in Poland and maybe in another country, but we don't have a unified legal setup for companies that's very well accepted in the international markets. The Austrian joint stock company is completely different to the Swiss one, and it's really where do you set up and then educate the people in the national company law for 27 or 48 countries. It's not going to happen. So we kind of need also, even if the mindset changes, we also need some kind of harmonization here and something that's globally accepted, like Delaware Limited, for example, what a lot of companies set up if they want to raise money.
When you mention fragmentation, we of course have 27 different regulatory regimes. I think it's 30 stock exchanges, a dozen different investor cultures. What's stopping us from integration? Because that we have this problem is not something that's particularly new, is it?
Well, I think political willingness is, if we hear the certain messages, we have the feeling that there is political willingness. Yeah? In public notices, we always talk capital markets is the essence of a well-developing business hub. But when it comes then to the implementation of certain regulatory structures, we are facing that each country has a different interpretation of certain regulatory frameworks. For example, we do have a unified prospectus regime in the European Union. If you want to do a public offering, then you have to have a summary. Some countries say English is sufficient. Other countries say, well, no, English is not sufficient, you also need to have it in our language, which in Europe creates already many different languages. Mm-hmm. Then some countries say, no, you have to have certain risk factors in it described in specific ways. Other countries have a different interpretation. And that results at the end that from an advisor's point of view, we really have to say, is the public offering really the trigger you need in order to grow, or just go with the institutional investors? And that clearly shows that harmonization by a regulatory framework is not possible when here also the mindset is not really there. And the political willingness, as you said, Henriette, is reduced to statements in the public, but not to acts in the reality.
Why do you think that is the case?
I mean, we have a tendency of certain strengthening of nationalist mindset. Obviously, capital markets is an important element in a political structure, and you have human beings, and human beings decide on how to interpret. It's either the market authorities which look on it. It might be the regulator who is dealing with it. And that makes it difficult really to say there is in every European country a local and an English text of the summary is sufficient. And that's why it's just willingness. Yeah.
Mm-hmm. Henriette, I saw you reacting again.
Yeah, I'm not sure if you're already talking about Capital European Union, the Capital Markets Union. Mm-hmm. And I think, Jürgen, you're right, but there are a lot of measures they are carrying out right now in alignments of requirements in this so-called Listing Act things you mentioned before. And we see that these activities and things are worth and supportive, but you will not raise competitiveness of Europe against or to US, for example. So there needs to be or to have bigger measurements.
I looked it up before in preparation for this talk as well. You mentioned it, the Capital Markets Union, that has been on the agenda, Henriette, for nearly a decade now already. I'm sure there's some things that have worked in that direction. So just to give a brief overview from your perspective and also from the perspective of the Wiener Börse, what has been working well and what hasn't?
I mean, there are measurements like to lose a little bit the requirements for going to public markets, prospectus things, so requirements for being listed, things like that. Easier requirements of regulations like price-relevant information or directors dealing. So, but this is nothing very big, I would say. Mm-hmm. And but the Commission also recommended the member states to think about a tax incentive with saving and investing accounts. So, and that would be a real boost. Mm-hmm. But I don't know, so we will see what's going on. It's definitely on member state side to do that. So
I'd like to get Florian back in, maybe perhaps also with a sort of personal perspective, because if we look at how you all describe the environment, it's, I wouldn't say hostile, but it's not comfortable for most companies starting out. But with Blockpit, you had success in the form of it began as a startup, you're now scaling up. And just to give us an idea of how your personal journey was in this environment and the lessons you've also learned during those last, I think it's been 8 years.
8 years, yeah. I wouldn't say hostile. And a lot of things have developed in the last 8 years. So when we started in 2017, I think it was a little bit of a breaking point on how the whole topic of entrepreneurship, startups are being seen in Austria, for example. And we've seen a lot of successful projects as well that bore the name of a startup, right? And then exited for hundreds of millions, and people actually made money and said, okay, this could be an interesting investment case. And we're seeing those entrepreneurs reinvesting into startups. So I think we do have a lot of opportunities for startups in the early stage. In Europe as well, I think it's the same in many countries. We did a completely different route. We didn't do the traditional venture capital fundraising, but we did kind of like a crowd investing on a blockchain token base as our first investment round, because it was possible at that moment. So we were quite open with the regulator as well in Austria setting that up. And I think there's a lot of opportunities as a startup in the early stage from angel investors. We have great networks, seed investors, venture capital, crowdfunding, and so on. But later on, so we did our Series A in 2021, and there was not a single Austrian investor on board. There were UK investors, and then there were funds that are incorporated in Luxembourg. And it's basically most of those Series A, let's say like 10 million upwards investments, they do come out of those jurisdictions because the fund's set up there for different reasons. And we haven't raised a larger round since then, and we don't plan to, but I think it would be extremely difficult to do 50, 100 million upwards coming out of the European Union. I wouldn't even know where to start and who to talk to, because all the contacts that I have from the Series A that would have the liquidity to invest in those follow-up rounds, they are not incorporated in Europe.
Mm-hmm. I think this gets down right to the core, and also back to something that you said in your first answer, which was when companies get interesting and it's a time to go for the big investments, the money does not come from here, it comes from foreign investments. And it also brings me back to something that the Chancellor said in his video message, which was 330 billion going out from Europe to the USA every year at the same time. Isn't that a paradox situation?
You could think so, but mostly it's then money coming in and then basically it's becoming a US company at some point in time. So the ownership is just gone. It's no longer a European company, maybe even incorporation changes and taxes don't get paid here anymore. There is a lot of money invested, I would say, like in those private rounds of like Series B, Series A, but once we go then to public listing and things that are actually tradable, where retail can also invest, and this is where way more money than accumulated flows out, it's then again listed not within Europe. And so I think the money that's coming in those earlier rounds and the money leaving at the higher valuations, it's just a negative balance for us in Europe.
Okay. Listening to this, Jürgen, how do we tackle that issue?
Could you just repeat it?
Yes, if you listen to that story and also the difficulty of having the money coming from Europe, how do we tackle that issue?
I mean, our biggest challenge in Europe is exactly to support entrepreneurs in the growth part at the second step. Because when we go for a stock exchange, then size is a matter. We do not, or should I say, we see the issue that we need to create liquidity on the market, and that's why you need to have certain appropriate sizes to approach an investor base on the public market. So the private market and the private money will be extremely important for this growth path. And here we don't have the ecosystem in place which allows for corporates like you to talk on and to leverage the existing money in pension funds, or not pension funds, but venture funds, whatever capital is available.
Mm-hmm. Yeah, maybe I can add what I think would be necessary. I think you have to make both sides sexy again, like listing in Europe for the company, but also investing into European stock with European money. Mm-hmm. And we just don't have this narrative at the moment, which is also because it's so fragmented, right? Like, where do you list, and then where do you invest, and where do you create your account on which stock exchange to invest, or do you like create 30 accounts to have access to everything? And then the second part is just like the valuations are insane. Like, if you want to list on a European stock exchange and you compare to the Nasdaq, it's like the valuation that you can get at listing and the liquidity that you can get is just nowhere near. And people, at least the companies, are still very much driven by valuation. And if you go the VC route, the VC investors are driven by valuation. And I think that narrative needs to change a little bit, because I think like liquidity is way more important than having this initial listing valuation. But we're kind of lacking on every front as long as we are not unified. Mm-hmm.
May I add something, please?
Yeah. Yes, of course.
You're so right with your valuation statement, but we had a closer look on the last IPOs on Nasdaq and compared to Europe, and what we could see is that the IPO performance on the first day was about 30% in average in the US. It was 5% in Europe, but the year-to-date performance, and so it was September, so it was year-to-date this year to September, and it showed that there was Nasdaq 32%, so only 2% plus after the first listing, a trading day, and it was about 30% in Europe. So the development was steady growing for European IPOs. I wasn't aware about that. Very interesting.
We should advertise that. I mean, that's good.
You have to help us.
the American mindset is always like the short-term hype, right? And you see it on the listings, and I don't think it's sustainable as well. And we've seen it in the past as well, years that the listings don't always go well. This goes up and then it goes down, and then at some point it stabilizes. And we just have a different mindset, I think, in Europe as well.
And 2/3 of all European IPOs listed on the on Nasdaq, 2/3 show a negative performance. Even Klarna, I don't know if somebody looks at it, but we should talk to the investment banks.
I mean, from our side, I think this valuation argument is very often exaggerated to a certain extent, because we don't really, when we look to evaluation and say, and one market evaluation is not appropriate, we have to go to another market. The question is, will you really get the same or a different valuation on the other market than you would get at home? I personally, I'm convinced that what Henriette said clearly proves it also from an empirical point of view, that investors are evaluating a company, taking and reflecting the risk the company has. And if it's a European company, it will be also reflected, the valuation will also reflect the European risk at the end. One big difference is obviously for tech corporates that this growth path and I would say a revenue multiple approach is not so common with European investors. We are looking on, you need to have some money already earned. You need to have an EBIT or an EBITDA which is positive. Yeah? And that makes it a little bit more difficult for a very innovative, extremely growth-oriented companies to find the right investor base on the European stock exchange. But an established company, I do not believe that they will be in the longer run valued better in a different market than in their home market.
Do the others agree on that perspective? Henriette, Florian?
Yeah,
okay.
Definitely. We agree on that. And I think also the more risky appetite for tech companies or biotech companies, that's definitely the case in the US. But maybe I would like to add something what we discussed before, because what we really would need in Europe is an aligned pension system to capital markets. And this is what the US provides. That's a big, big difference. And also Sweden and Norway they already implemented that kind of pension scheme. So that's all what we have to do. Then we would have really.
Then we can do it state by state, right? We don't have to do it on a European level all at once. But
can do it. It's a member state
so
issue. Yeah.
We could just start in Austria and just do what Sweden, Norway does. And I think that's the only way that we approach it. Like once maybe half of the countries do it, then maybe we can agree on an EU-wide approach. But if we have to first get everybody to confirm, we're never going to get anywhere.
But the Commission already recommended member states to work on it, but there is no framework recommendation.
No, I mean, I fully agree on that. Yeah, in reality, it's a pension system which creates the investor base. Yeah, because unification is one thing, simplification is probably the more essential part of a joint European Capital Markets Union. But pension funds, these are the ones who provide the money, and you can have the best regulations in place, the most easiest to understand. But if you don't have investors, it will not really develop.
And as you all correctly said, this is something that member states can do on their own already. But the question is, why aren't we? And I guess it brings us back to this whole mindset and narrative question. And it's kind of hard to grasp then who you all would see as the responsible actor in that. Is it politics? Is it banks? Or who is it on a broader level who has to sort of kick off this mindset change that you're all advocating for on this panel?
I mean, first, a good example is on creating pension system Poland. I would say in the late 2000s, they implemented a very future-oriented pension system. There had been very rare number of countries who had such an approach. Hungary was, by the way, another country who did it. But the issue is, if you because the state had to support it, and the state had to pay into it, yeah. When we look to it from a budget deficit point of view, then obviously it puts pressure on the budget deficit. Now, Poland was heavily fighting for the idea that the payments contribution into these pension systems is not reflected on the Maastricht criteria as a negative effect. Obviously, countries like Germany, France, also Austria would be such a country who have a different pension system where we lie ourselves in our pocket, and we know that at one time a generation cannot afford it anymore to pay to live on that basis. But still, it's not Maastricht relevant. So that was also the reason why Poland, first Hungary totally rewinded it, and then Poland started it to rewind in steps. But Poland at least was in the beneficial situation that they have already created an ecosystem for investors, because it's not just the pension system. The pension system are typically the incubator for an investor eco-base.
Florian, I'd like to get you in on that as well. So the broader question of who, because you were the person who mentioned the necessary narrative and mindset change multiple times, who is that addressed to for first and foremost, in your opinion?
I mean, it's addressed to everybody, but obviously the new generation of investors. Financial education, I think it's a big topic that we are talking about a while, but we're really late, I think, to make that happen. It has to be a fundamental change. In the mindset, I think we've done a good job over the last years. I think the mindset is there with the new generation. They're more actively going. I was pretty surprised, like 30% of Austrians investing in the capital markets. I think that's a huge bump up. And I guess it's coming a lot as well from my generation, and maybe the generation afterwards, that is now in the position to also invest, and a little bit more risk-affine, I would say, potentially. So, I mean, the longer the time passes, the more people, the young people will get money, and so this is the main target group. But I think it's true for everybody.
Okay. Is that something that you're noticing? Because I am, and I guess we're sort of in the same age group amongst the people of our generation, that there's more of, how should I say, a closeness there to go into investing and so on and so forth.
I mean, technologically, it's way easier than it has been in the past, right? So, I mean, it's just downloading an app, 2-minute KYC process, and you can do it. And people actually talk about these things as well. So it's a conversation, at least in my friends group. Financials are just a topic. I can't speak for everybody in my age group, but that wasn't the case like 10 years ago. It was a rarely touched upon topic. And I mean, I'm coming from a very special sector of like crypto and blockchain, and this also triggered a lot of things for people, accessibility, just basically, and then dealing with what actually is investment, what are financial products, what can I do.
I want to get it back to crypto at a bit of a later point, but I would like to get Henriette in now again with sort of back to the European perspective and the question which role a European exchange like Vienna can play in making listings, the continent, excuse me, more attractive for listings as such, when we also talked before about the US and the comparison there.
I mean, to be honest, Vienna would not make the continent more attractive as a single stock exchange. And I think as a stock exchange, we do more than beyond and above than every other exchange for getting listing to the market, or to do education for companies in regards of conducting IPOs, things like that. But I guess we are not, as a stock exchange per se, we are not in the role to influence directly to list companies to list. So that's something we can offer a proper marketplace, which we do, and I think we don't have the time now to talk about some myths of Vienna Stock Exchange, but I guess we have really a proper offer to companies willing to go public and listing at Vienna Stock Exchange.
I mean, you can detail that a bit. We do have the time, so don't worry about that.
No, fine. Now, what's important for companies? They have to be visible, which they are at Vienna Stock Exchange, because they are. I guess it's easier to be included into a leading index, and it's a very, very crucial point. Nobody talks about it because it's a little bit technique, but it's very important because more and more passive funds are coming on the market, and they invest automatically into an index. So it's very crucial for companies to be included into an index with a certain weight. So then more and more passive investment will flow into that company. So, and then we have access to global investor base, and I don't know if you know that 30% of institutional investors are US investors at Vienna Stock Exchange, and only 10%, no, less than 10% are Austrians. So this is our investor base. It's very, very global, so we have access to the world. And the trading banks, it's the same for trading banks. More than 80% is not traded by Austrian banks. Of course not, we're too small.
Mm-hmm. I want to take it back to you, Jürgen, with the question of banks as such, but also the same question, which role they can play in making the continent more attractive for listings. If you could talk about that from not a personal, but from a company perspective, of course.
I mean, banks have different roles. The one thing is attracting opportunities for people to invest. Well, of course, we also have a little bit the challenge that we are operating in a regulatory framework, which not every financial influencer has to adhere to. The second topic is where we can help to make it more attractive is obviously talking to clients, helping them to understand that equity is a great opportunity to fund growth. But also what is important to clearly say or indicate it's not just raising money which drives going to a stock exchange. In my opinion, is the most benefit a company has from being listed is the disciplination of an organization by proper governance and by adhering to capital market structure. And to tell the story right in a strategic interaction with the client should help motivating companies to go to the stock exchange. The third element is I strongly believe capital market requires a certain cleanness. I mean, we all have heard about examples of listed corporates which had faced or which pushed investors into a total failure. Wirecard is a famous name with regard to that. And I think it's a responsibility of banks to take care that whenever they are working with clients, that certain standards are adhered to and that people are complying with it. And that's something what I also see as a challenge from a regulatory point of view, because we see a number of smaller brokers who find their way, of course, leveraging their entrepreneurial spirit, but sometimes are not, or I would say, they are very walking around the cliffs of the regulatory framework. And in my point of view, in the long run, this does destroy trust in that market. And that's a total difference to the US, leaving aside current political environment and influence of certain political or certain groups. US is famous that when you do a failure there on the capital market, then you have a real issue. And that's so important where I would say the banks have one role to ensure that standards are adhered to, but regulators have the obligation and the responsibility also to support these banks in adhering to it and not pushing them in front of competitors who are a little bit more flexible in their interpretations.
But isn't there, just as a quick follow-up question, a certain tension there when you say we have to adhere to those standards and make sure that those frameworks are, working in order to achieve the trust level that is needed, but at the same time, something that we're absolutely lacking compared to the US as well is this appetite for risk. How do you balance those positions?
I mean, following standards has nothing to do with ignoring risks. Yeah, in reality, standards means you need to clearly indicate what is the opportunity and what is the risk in a certain investment. And you just need to be transparent in the way how you are dealing with the market. So I don't see a contradiction here.
Then I'd like to take it to Florian, talking about risk. What can traditional exchanges learn from crypto markets and vice versa?
I mean, I think we can all agree that for the last 10 years, the crypto markets have been an unregulated Wild West. But it has shown a few things, because what's possible if you have a unified capital market, and crypto is basically a global, borderless, unified capital markets, and Uniswap, the largest decentralized exchange, had more volume than the Nasdaq in a few days. So there is a lot of appetite, and everything that you needed was like an app, and you created a wallet, and you put in some cash, and you can invest in whatever. Obviously, risk is very high because 90% of those things fail within a few weeks. So you have startups going IPO, one day after founding and being tradable. But it didn't really make people lose trust in the system. They came back. And so I think this basic balance between having this risk affinity but also having the regulation, I think we can go a little bit more into the direction of taking a little bit more risk and not regulating everything to death. Sure, if we talk about like IPO stage, billion-dollar valuations and stuff like this, it's something different. But what we can really learn from the crypto market is young people have an interest, and it's mostly young people, but not only. I mean, we do have 500,000 clients on our platform, and there are 80 years old among them. So it is something that people want to diversify into. But it also shows that take away the regulatory framework and everything and just unify technology, and it kind of works. It didn't die, right? Obviously, it was not good, and a lot of people lost a lot of money, and a lot of scams have happened, but now it developed into something that is getting regulated. We've done a lot of stuff in regulation with the MiCA, now in the European Union, but also in other markets. We're getting more regulatory framework, but we came from the technology side and the unified approach, and now we're regulating. And somehow it still worked out. There's a lot of liquidity, a lot of capital, a lot of great projects getting financed that are now building and providing solution technology that is actually bettering the world as well.
Henriette, I want to get your perspective in on that, coming from the side of a traditional exchange. When you also listen to Florian on this, is there something where you can say, okay, this is what we can pick up on, this is what we can learn from the crypto scene?
I think we have to distinguish between the asset, crypto, and the technology. And that's very crucial. And Vienna Stock Exchange also runs Prague Stock Exchange. And Prague is also the owner of the CSD, which is a depository system. In Austria, that would be the ÖKB, just to bring you online. And Prague Stock Exchange, so the CSD of Prague is the first CSD, I think worldwide, implemented a DLT technology to run their system. So why did they do that? I'm not quite sure, but I think it was quite efficient and a modern technology, and everybody is happy with it. But there is no crypto trading or settlement of crypto. That's not what they do there. Mm-hmm. For a stock exchange, we always license trading system, and we run, I guess, one of the most modern and state-of-the-art system from Deutsche Börse. It's called Xetra. If there would be a faster, a better, a more secure one, we would change immediately, I guess. Mm-hmm. So Vienna Stock Exchange, we are a mid-sized stock exchange. We will never, I don't know, we are a smart follower. So we would never be the first mover of any technology, but we would implement it immediately if it would be better or solve something. But I have to agree what Florian said. And I think a stock exchange is not a broker, and crypto exchanges are brokers. So it's hard to compare, I would say. But easy access, and for me, I'm a crypto investor as well, and I love to do that on weekends. And it's so easy, and it's like gamification. But I would never do real investments and savings in cryptos. Maybe that's a different personal note.
Mm-hmm. I mean, not all crypto exchanges are brokers. Bitcoin is a broker, yes, but there's also order books, just like you have in a traditional exchange. I think one thing that we can definitely learn is like they are open 365 days a year, 24 hours. I still don't know why we can't do that with traditional exchanges. And people are getting used to this, right? Like, if you close the exchange at 5 p.m., then everybody who is in crypto would be like, what's happening? Mm-hmm. And it's a global market, right? Global capital, borderless, liquidity that just goes everywhere. And then the other thing is like, this is standard. I mean, I agree, we need regulated financial products, and then combine it with the blockchain or DLT technology. But what we've seen is like, we had this, now we have the GmbH in Austria and the AG in Switzerland and so on and so on. But in crypto, we just had a token. And there was no regulatory, basically, instrument behind it. and people just used it. And I think if we can get to an approach where we do have like this framework of like a financial instrument that's globally accepted, and combine this with distributed ledger technology, we could get this basically combination of the regulatory and investor protection approach, but also have the benefits of unlimited liquidity and basically open every second of the day.
Why can't we do that with traditional exchanges open 24/7, 365?
But we can that, but we could, I think we could, and so it's not only the stock exchange, it's the banks, in fact. So, but no, we tried, and I think Frankfurt closes at 8 o'clock. So I haven't heard if if there's huge volume traded there after 6 o'clock, for example. But if there is demand, I'm sure everybody would be keen to do that. Vienna opened, I think 7 or 8 years ago, we opened the market on holidays, on bank and public holidays. Yeah, that's something we could compare. So we have about 20-30% of a normal trading day on volume. It's something, but it's not so substantial.
But we don't want to have only the capital in our time zone, right? We want to have Asian capital and US capital. So, I mean, they just start trading when we close sometimes.
There are more than 30 venues in Europe. You can trade 24 hours if you want, believe me.
What's the perspective from the banks on this? Because Henriette said it's the banks.
It's always the banks.
Always the banks.
That we should already know. But I mean, at the end, I see a little bit of difference between a crypto trading place and the stock exchange. Yeah, not just from a technical point of view, but also on the stock exchange, you have the corporate news flow, you have the business models behind it. Yeah, I'm not so sure if it would bring. I mean, it is important that foreign investors can trade, and that also someone who is from Asia or from US has a possibility and the flexibility to make trading activities, and there is a lot of possibility to do that, and it's also banks who are offering it, or it's also other brokers who are offering it. But I'm not so sure if it's necessary at the end to allow trading on Vienna Stock Exchange at 3 o'clock in the morning, because the message of the company has delivered will not be different at 3 o'clock as it was at 6 o'clock or as it was at 8 o'clock in the morning. Yeah? Obviously, geopolitical topics will influence it, and they can be also overnight. But there is, as I said before, there is trading possibility available.
So a quick detour we took here. I have one final question that I'd like to pose to all three of you, and it starts with looking to the future a bit. If we met again in 2030, so 5 years into the future, what would success look like for the European unified capital market? Would it be having one exchange? Would it be having one rule book that goes across the continent, or simply having better access to capital for European companies? How would you define success if you think about Europe 5 years down the line? We can start with you, Henriette, and then just move down to Jürgen as well.
Yeah, I would say better access for companies on every stage of funding, not only on stock exchanges, especially before deciding going public. That would be. That's where we should be.
Florian?
Yeah, I think just a way to bundle liquidity. Could be one exchange, could be that, or some kind of standard, or also like a technological breakthrough that we just manage to bundle the liquidity that we have in all the states into any state and any company. And if we manage that, and I think it's possible, that could be achievable in 5 years, I would say. Complete regulatory overhaul, I don't think it would be possible, but it doesn't always have to be the regulation. There could also be solutions that just make things more efficient.
Jürgen, closing word is yours.
Access to capital, I think it's a relatively simple topic. If that works with one stock exchange, or if it works with a simple rule book, doesn't matter, as long as corporates have access to capital when they want to grow, that they can grow. And also corporates in a framework which is more reflecting our microeconomic environment. Yeah? because we are not US with the multi-large corporates. We have a smaller corporate environment, and our entrepreneurs need to have the money to grow.
Let's hope that we get there. Thank you so much. A round of applause for our panelists, please. Thank you. Perfect.